to Weekly Market View. I'm joined by Bill Hoopard, as usual. Bill, so what are we focusing on this week? Do we focus on the Syria situation? Do we focus on central banks? What do you think? Bill?
Did you say a serious situation or the serious situation?
A very serious situation.
Well, I think it's very difficult. You know, we had a client seminar last weekend, and with all of my seminars, it's all sort of a question and answer. I never do any charts. And within 5 minutes, after I started my seminar, whether I talked about gold or oil or the euro, the next question is, you know, what do we do? Forget the data. What do we do? How do we react if the situation in Syria, you know, erupts? And I guess what classic was, I was just saying that my feeling on dollar yen for the year end is 105.50. All the hands went up and says, yeah, well, so do we, based on what Abenomics is and the economy. But their feeling is 95 if all of a sudden, you know, war breaks out in Syria. So, I mean, we're not talking 1 or 2 ticks here. I mean, that's one heck of a difference.
Yeah, sure. Do you think dollar yen's going to be a good early indicator of the dollar positioning? I mean, you know, euro dollar's been stuck in a bit of a range, you know, testing the top and bottom.
I only say that because Japan is a long way away, you know, from the Middle East. Also, the simple fact is, could then Japan or the yen become a safe haven currency? And that's basically the thought of the people who were looking at 95 was the simple fact is, it would affect what the Japanese government would do in reference to deflation, in reference to growth, etc., etc. And I think that's maybe what everybody's expecting. You know, we've got the UK, which we can't afford to turn the lights on, and we're going to spend billions of pounds, you know, in some situation in Syria. The US runs out of money on the 31st of October. But we want to buy another 10, 20, 30, 40 billion, although it's only going to be, I guess, you know, last week the war was going to last 48 hours. Now, I don't know whether it's gone from 60 days to 90 days with the US, albeit it still says the Senate will have no boots on the ground. But now the key is going to be the House of Representatives, because one of the things in the lower house, the House of Representatives is re-elected every 2 years. So they have to be listening to the population. And I mean, the general population is like 65%. We've had enough of Iraq, we've had enough of Afghanistan, and there's still enough of us around who, oh, I remember Vietnam. Okay. And
do you think that's the same in the UK? I mean, we've seen a similar picture here. The public doesn't quite buy into it as much as...
I think it is.
Is it important to follow the US? Are we, you know, I know we're slightly off topic, but do you think it is important for the UK?
Well, I think one of the things where we mix and matching, okay, everybody, whether you're conservative or whether you voted for it, everybody in the press the last 3 or 4 days, oh, gee, it means that we're second-rate citizens and stuff like that. No, I don't think our status as a country has changed whatsoever, and I hope I don't upset any of our British viewers, but maybe they forget 1775, and maybe they, you know, I mean, Britain has reduced themselves. I mean, I think our standing army is no bigger than it was during the Battle of the Crimea. So it's a situation where I'm not trying to be negative, but Britain does not have the same impact as it did 50 years ago. Whether we like it or not, even Russia doesn't have the same impact, although Putin seems to think that they had 20 years ago. And there's really only one major, you know, global power, with China moving up.
Sure.
And I don't think it will have any effect whatsoever on the special relationship or the interaction. But my feeling is, and maybe the simple fact, having been in Vietnam, you know, with Iraq, Afghanistan, etc., I've become more of a pacifist all along. And I think the problem that I had with last week's parliamentary discussion, it was too fast, too quick. You know, people didn't even have the, you know, have a chance to relax after coming back.
You've got to call back in, especially, and then
and I mean, did we know what the rules were? And I think again it was a situation where it was brought up, and it's been brought up in the U.S. as well. You know, weapons of mass destruction. You know, and I don't know how it is here, but I mean, in the States, the politicians are probably at the people's trust, understanding, willingness to deal with politicians is like a pre-World War II low.
Yeah. So Okay, so gold and silver, now they've had a good rally. It's a little bit quieter this week, but do you think that's the flight to quality?
Yes, I think it is. I've gone back to my feeling we could easily see gold at $2,000 because if nothing else, we're not going to have an inflation. Rates are going to probably start going up, but you're still having the central banks. I think you've had 10 consecutive months where central banks have increased their purchase of gold. I see that still being around. Also, the simple fact is, if gold gets, and I don't know, I'm making this level up, I don't know, 1492 or 1508 or this, that, and the other, all of a sudden it becomes profitable to reopen some of the mines, whether it be silver, platinum, palladium, etc., etc. So I see gold continue to improve here. One thing I will have to say today, I was disenchanted with the Bank of England. They did what I expected to do, but I was expecting, a la the July meeting, if nothing else, a brief statement, okay? Because we all know that Mr. Carney can talk the talk. He talked the talk last week, and now there's not a soul out there that believes rates are going to stay as they are until the middle of 2016. After yesterday's data, the futures are saying, wait a minute, we're talking second quarter of 2015. So if he keeps reiterating that it's important, do we have to wait now another 10 days to get the minutes? And maybe, just maybe, will Martin Wheel start to say something? Will we start to see some kind of, quote, slight division within the Bank of England?
Do you think so the minutes become important when they get
released?
Yes. Yeah. Okay. So on the subject of central banks, I mean, I know it's got a little bit out of less popular, but the sort of the general tapering, non-tapering kind of question. Do you think that's what the markets are back focusing on?
It's got to be. Because if nothing else, we've seen from May onwards when everybody's, we all knew quantitative easing was going to taper off, and now we may have a date, and people were concerned that it was the 31st of July. Now I think most people, 90% is set tapering. I think what we'll see now, instead of it being maybe 10 of treasuries and 10 of mortgage backs, it'll probably be maybe 5 of each. But one of the things, and I've been really thinking about this, and I mentioned this last week at a client seminar, that this is not the 1980s, when the U.S. sort of didn't realize there was a slight problem in Argentina and Brazil, and Volcker kept raising interest rates. This is closer to like 98, when all of a sudden the Thai baht and the Russian ruble came through, and that slight problem with long-term capital management. And then Greenspan, we saw reduced rates for, 3 out of the next 4 months. But the point I'm trying to say is, in 1980, emerging markets were 15% of global GDP. It moved up to 35% in 98, now it's 1 to 1. And I think one of the things, and I know each central bank basically works within the framework, except the ECB, of course, the framework of every country in the world, it seems like. I think the Federal Reserve, truly on the 17th and 18th of September, and that's just now, I have no idea how it could change if there's a problem in Syria. The Federal Reserve has to think is, quote, the world's global central bank, and anything that we may do to affect Detroit or Cleveland or San Francisco may have a more of a dramatic effect on Rio, Azerbaijan, and places like this. And especially, we've seen, whether it be the Indian rupee, Indonesia, Malaysia, and I think one of the things that maybe people think about is, well, that's their problem. Well, how many of our viewers have, a global pension fund, an emerging markets fund, this, that, and the other? And I think, just looking at the data, something like 90% of the world owns Malaysian assets, okay? Not just the Malaysians.
But I guess that's the true face of the international,
yes.
We talked about before about the FTSE being hardly a UK index,
yes.
but a global index. Okay, I guess finally, perhaps I could ask you, kind of touched on it before, the debt situation in the US. Are we going to have a similar, what was it was August 2 years ago, wasn't it, when we hit the debt ceiling?
Well, it's going to be quite interesting, because one of the things that settled the market down was when the Speaker of the House of Representatives, John Boehner, who is a Republican, and he's basically been, since day one. I'm not even sure Barack Obama is your name, so he's been anti-everything, okay, Obama. Now, he came out from day one after the discussion that he would support it within the framework. And even John McCain, who's an arch dove, albeit he shouldn't be playing, poker on his laptop, but that's neither here nor there, right? But even he was saying, as long as we have a qualification, no boots on the ground, etc., that he would support it. Now, whether that means that if whatever they approve and it gets done and from the U.S., you know, we've saved the world from Assad and all that kind of stuff, then does that say maybe working together for the good of the people? And that's what it is, okay? For the good of the people come the 1st of November. Okay. You know, I would expect. But again, we've got Syria, we've got Fed tapering.
There's plenty of stuff to distract us before then.
Yeah, before the 1st of November.
You hope they're not taking their eyes
yeah,
off the ball.
and that's the thing. But I do hope that if the U.S. Congress listens to the people and puts a constraint on, you know, a time frame on any war or whatever you want to call it, and also the simple fact is, if they listen to the people then, well, they also listen to the people. We cannot afford for the U.S., you know, the global economy, the U.S. dollar, all of a sudden, you know, you turn on Bloomberg, you turn on CNBC, you turn on us, and it says, sorry, U.S. is closed,
yeah.
You know, out of business, forced labor.
Which is kind of what happened.
Yeah, exactly. And I mean, you know, the fragility of the global economy can't be upset by some misplaced word, misplaced comment. Hence the reason I felt it was extremely important that the Bank of England should have given us a statement today, okay? Even if it was just 50 words, who cares what it was? We knew there was going to be no change in reference to rates, QE, et cetera, et cetera. But the market, again, we hear you, but we don't believe you, Mr. Coney.
Okay, all right, well, thanks very much, Bill.
So I'm sorry if I've impressed everybody.